Dear viewer, welcome to the Churchonomics Money Talks. Today we are going to talk about investing in government securities. Dear viewer, you're already aware that the cost of living is skyrocketing. The rate of inflation is increasing day by day. And lately, the government announced that it's going to increase the cost of electricity by 63%. Many Kenyans are now crying foul. Some are calling for mass action. But is that a solution to the cost of living? Here at Churchonomics, we are focusing about personal financial literacy. We have been learning about saving and investing, the difference between saving and investing. And now we are going to talk about particularly investing in government securities. Remember, we talked about financial arithmetics, and our focus is on one important mathematical symbol or financial symbol called multiplication. How do you multiply your money? Indeed, you have learned that of late, government securities are on offer and the demand is so high. While the stock market, the prices are going down, the prices or the interest that is offered by the government in terms of treasury bills and bonds is going up. So we are going to talk about government securities, why you need to invest in government securities and how you can start a step-by-step process. To begin with, what are government securities? Government securities basically are ways through which the government borrows money domestically from the citizens. Dear viewer, do you know that you can lend the government of the day, for example, the current Kenyan government, your money? Someone could say, no, how can I lend the government money because I didn't vote for it? The issue of politics and emotions, you keep them aside. You're talking of economic principles, personal finance. You can lend the government money and it gives you returns in terms of coupons or interest. So the government borrows money domestically from citizens in two tranches in terms of treasury bills and treasury bonds. You may ask yourself, what are treasury bills? What are treasury bonds? Treasury bills are short-term market instruments through which the government borrows money, and they come in three forms. We have the 3-month treasury bill, that is the 90 days or the 91 days. We have the 6 months, that is the 182 days. We have the 1 year, 12-month, 364 days treasury bills. So they range from 3 months, 6 months, and then 12 months. Of late, the prices, the interest offered on the treasury bills have been going high. The 3 months has been fetching an interest of 9.7, 9.8, and it's going to 9.9. The 6-month treasury bill is fetching an interest, a coupon, which is over 10%. What about the 12-month? 12-month is also heading to 11, 10.5, 10.6, 10.7. In fact, the latest bid, the government was bidding at 10.7. Imagine, if you are saving in a money market fund, the interest is low, even if it is compounded. What about treasury bonds? Treasury bonds are money market instruments or securities that are ranged from medium term to long term. That is from 2 years to 30 years. In other words, you can lend your money for 2 years, 5 years, 10 years, 15 years, 20 years, or 30 years. Some of you may wonder, can I lend the government for that long? Or am I likely to live for that long if you are aged or retired? Let me tell you, the money, the treasury bills and bonds are secure. They are very secure. They give higher interest rates, higher than any money market fund, higher than banks, and we'll talk about what we call an infrastructure bond, which is tax-free. Yeah, tax-free. The latest was going at 14.399%. And that is passive income, money earning interest while you are sleeping, money working hard for you. So in this case, it's important if you have money lying idle in the bank account, if you get a windfall, huge amount of money, invest in government securities. For treasury bills, the minimum amount of money you need to invest is 100,000. For government bonds, the minimum amount of money you need is 50,000 Kenyan shilling. But for the infrastructure bond, which I've said is tax exempt, tax-free, It goes at a minimum of 100,000 shillings. And for you to invest or lend money to the government, you need to visit any branch of the Central Bank of Kenya and open what we call a CDS account, a Central Depository Settlement Account, at any branch of the Central Bank of Kenya. You can visit the website, that's the CBK website. They will give you details about what is required for you to open a CDS account. So once you have opened a CDS account, now you can actually buy or place a bid via SMS. You can place a bid online. And why then should you learn how to invest in government securities, that is treasury bills and bonds? One, we have said your money is secure. The government of the day cannot play around with your money. In the unlikely event there is a civil war, God forbid, that is when perhaps the money would be at risk. So this is the safest and actually less risky kind of venture which gives you higher returns. You have heard that even the 6-month treasury bills gives you a return of over 10%. Even most circles that are giving dividends are not giving even higher than 10%. Some are giving slightly lower than 10%. The other reason why you should invest in government securities is to diversify your savings and investment. Even if you are in business, you have to work so hard. But if you have money lying idle in a bank account, 50,000, 100,000, please put it here. If you have gone for a loan, later 500,000, 1 million shillings, and the money is lying idle in a bank account for 3 months, why don't you invest that money in a 3-month treasury bill and get 9.7%? So this is something very important. And the next time we are going to look at now the step-by-step procedure, because we can't say everything just in one sitting. Stay tuned to the Chichanomics Money Talks, the only forum, interactive forum that teaches you about personal financial matters. Thank you. Stay tuned.